Jesse, let's start with the SEC. What sort of reprieve, then, is it offering to Wall Street?
Yeah, so, among all the complicated issues with MiFID, one of the most complicated for U.S. firms is by complying with MiFID, technically they will be violating U.S. SEC rules. So the SEC, they've been lobbying the SEC for months over this, and the SEC now seems close to saying, look, it's fine if you violate U.S. rules to comply with MiFID. We're not going to punish you for that.
Yeah, how's that going to go down, Silla, within the EU?
I think this is one of the sort of last hiccups before the January 3rd date when MiFID starts. And it just goes to show sort of the global reach of MiFID, that a law that was done in Brussels, ostensibly for a European market, has these wide-ranging effects. So I think it'll probably be a large relief both to Wall Street, but also probably to some of the European investment funds that will be consuming research from Wall Street.
Well, Silla, actually yesterday on the Goldman call, the CFO, Marty Shavitz, was asked about the impact on Goldman and its industry, and we got some very interesting details. Let's have a listen.
MiFID II is going to make it even more important than it's ever been, and it's always been important to have scale and depth and breadth, and I wouldn't trade our franchise with anyone else's.
So obviously, putting on a brave face there, but we got some details about Goldman pricing, didn't we?
Yeah,
we
Goldman
did, and we've seen prices throughout the year come out from every bank, and the latest was this $30,000 estimate, number that came out. And there's a lot of back and forth, and over the course of the year, the prices have come down from more in the range of 100,000 or more.
Yeah,
so we're keeping a very close eye on.
I know, and Jesse, we just have a chart up there now of the different banks and the different pricings, and Barclays may charge 450,000 for its gold pricing range. What do you get for 450,000?
Well, what's interesting about all of this is that it's hard to see a world in which Wall Street is going to make more money selling research than it has through trading. Wall Street has benefited for a long time from bundling these services. And as investors start to say, hey, I like getting research from one firm and I like someone's trade execution better, that creates a problem for Wall Street. And that's going away in Europe. And there's a good chance that U.S. investors start to see what European investors are getting, and they're going to want the same thing. So just because the SEC is solving an issue, for MiFID on the horizon, I think there's going to be a lot more issues down the line as, clients perhaps, go as far as revolting and saying, we want what the Europeans have. We don't want a conflicted arrangement where we're paying you one fee for everything. We want to pay the firm who does something the best to get that service separately from them.